Hello everyone, I'm Dr. Kalpana. I'm here again with my second lecture, lecture 1.2, Banking Law, Scheduled versus Non-Scheduled Banks. So this presentation explores the key differences between scheduled commercial banks and non-scheduled commercial banks in India, providing a comprehensive overview of their regulatory requirement, rights, and I would be giving you some examples also so that you can understand what kind of banks are called scheduled commercial banks and non-scheduled commercial banks. Scheduled and non-scheduled banks. So first of all, scheduled commercial banks are important to understand because they are listed in second schedule of Reserve Bank of India Act 1934. So that's why we call them scheduled commercial banks. Non-scheduled commercial banks not mentioned in the second schedule of RBI Act. And a scheduled commercial bank must have a paid up capital of 5 lakhs or more. There is no fixed criteria for non-scheduled commercial bank. Required to keep up CRR deposit with the Reserve Bank of India. What is CRR is important to understand. I do not think I do not know whether how many of you have some economic subject as a background. A student who are having economics as background must be knowing what is CRR. The full form of CRR is cash reserve ratio. A certain amount of liquidity RBI keeps as reserve with RBI from commercial banks, that is called CRR. Are required to keep CRR deposit with themselves, not with RBI. Authorized to borrow funds from RBI. That is the significance and importance of having scheduled commercial bank. Usually not authorized to borrow funds from RBI. So here, one thing is important to tell you here, we do not have, as of now, any non-scheduled commercial bank in India. We have developed banking system in India fantastically. So here I would be discussing with you types of scheduled commercial banks. Public sector banks, which is very important. Majority shareholder is Government of India. That's why we call them public sector banks. For example, SBI, PNB, Canara Bank, many more banks are there who are nationalized bank or public sector bank, or you can call it a government bank also interchangeably. Private sector banks, majority shareholder is private individuals, for example, ICICI, HDFC, Axis Bank, etc. Foreign banks are also operating in India, their branches and their services and financial products. Majority shareholder is a foreign entity, that's why we call them foreign banks. We do have Citibank as a foreign bank in India. We do have Standard Chartered Bank and that HSBC, which is a kind of high profile bank. So regional rural banks are also a kind of scheduled bank, which is finding its place in second schedule of RBI Act. Equity held by central government, state government, and sponsor bank. For example, Andhra Pradesh Gramin Vikas Bank is one of the example of regional rural bank. Uttaranchal Gramin Bank, as you know, its name is Gramin. Gramin means rural. Public sector banks are called nationalized bank. 1969 is a year which made history in banking of India. 14 major big commercial banks were nationalized to ensure that banking services and its benefits should reach to the maximum people. And one more reason for nationalization was that in 1969, India came across two wars. One is with China, another is with Pakistan. So we had Indian government definitely had a crunch of finances, and ready-made finance was available at that time with big commercial banks. So government of India decided to nationalize 14 big banks in order to have that liquidity with the government and to extend the benefits of banking services to the maximum masses. So more than what is nationalized bank, that is a legal affair altogether. So it is guided and regulated by company law. So whenever more than 51% shareholding is with any entity who takes the control of that company, that is called banking company. So nationalized banks are those banks where government of India is stakeholder of more than 51% shareholding. So, for example, Allahabad Bank, Bank of Baroda, Bank of India, Canara Bank, Dena Bank, which are popular banks, and few banks have had a merger 2 3 years back. You must be knowing Syndicate Bank merged with Canara Bank, and that OBC Bank merged with PNB. Uh, Other mergers also took place. So private sector banks, where 51%, more than 51% stakeholding is with private individuals. That's why we call them private bank. Old private sector banks left out of nationalization process due to their small size and regional focus. So new private sector banks came into existence. As we see, ICI is doing fantastic, and Axis Bank, HDFC, Yes Bank. So many more banks have their many branches across the country and doing very well so far as their services and financial products are concerned. So it came into existence after adopting the policy of liberalization. Private banking developed like anything. So foreign banks, we call them, they have their headquarters in different countries, operate branches or subsidiary within India. For example, HSBC has its headquarter in London, Citibank has its headquarter in New York, Standard Chartered Bank again comes from London. Regional rural banks, twin objective, credit, they were found to provide credit to weaker sections of the society in rural areas because banking was totally absent before coming to regional rural banks in India. And mobilize rural savings, channel them for productive activities. For example, if a farmer is having uh, sold his crop and keeping that money at home, that capital is a dead capital. I hope you understand, when the capital mobilizes, that can be invested and can earn some profit through deposits and buying certain Kisan card or etc. So today's takeaway, just giving you a short brief. Scheduled bank financially stable and regulated by RBI. So they are trusted financial institutions where we can keep our deposits with utmost trust, which we do. Non-scheduled commercial banks, less regulated, may pose higher risk to the depositors. So fortunately, we do not have them in our country as of now. Public sector bank, private bank, foreign banks, and regional rural banks are the major types of scheduled commercial banks which are having its place in second schedule of Reserve Bank of India Act 1934. So with this, I would like to end here. So have a good day. Take care. Happy learning. Thank you.